JPMorgan owns $5,119 of XRP. All of it. Goldman Sachs owns $86 million. Both numbers went on the federal record this week, and the story you were sent used neither. I opened all 166 filings myself. Here is the first one. That is a 13F. Every big money manager in America files one. It lists every US position they held on June 30th. This is your XRP news desk. And the version going around tonight multiplies numbers like these by 1,000. So read the page with me. JPMorgan's table runs 34,000 lines, and 2 of them say XRP. 113 shares of the Bitwise XRP ETF worth about $1,300. 181 shares of the Grayscale XRP Trust ETF worth about $3,700. If you add them together, you get $5,119. Now do the division, because that is where the 1,000 dies. 1,300 divided by 113 is $12 a share. That is what one share of an XRP fund costs. Thousands would make it $12,000 a share. Then read the 2 columns nobody zooms in on. Investment discretion, other. Voting authority, none. JPMorgan is not the one choosing. It cannot vote a single share. It is holding those for somebody else. Like, comment, subscribe, and hit the notification bell because I read every one of these pages myself. And tap the hype button while you're down there. This ends when I go back to the search that found these filings. Change one day and you read what the same question returned a year ago. 5,119 on a 34,000 line table tells you nothing about how many tables carry an XRP line at all. You are looking at the SEC's own search, set to one form and one window, 166 institutions, 24 of them filed on the August 14th alone, and you can read that date off the column in front of you. Those forms are due 45 days after every quarter closes, so every number I read you tonight is a photograph of June 30th. Now read the names with me, because this is where the story separates from the headline. Count how many contain the word wealth or the word advisors. I get 69. 69 of the 166 are financial advisory firms, the people who run a retirement account for a dentist. Not one of them is Wall Street. 19 are trading firms, and what they're actually doing is the strangest thing I read tonight. 18 are banks, and you already have seen what a bank line looks like. There's also a Japanese retailer on there, 3 Canadian banks, and an Italian one. So when somebody tells you Wall Street is quietly stacking XRP, the honest question is which of the 69 names they mean. JPMorgan's table cannot answer that because the biggest bank on the whole list is not JPMorgan, and it is not even close. $86,500,000. Goldman Sachs across 5 separate XRP funds. 21 shares, Bitwise, Canary, Franklin, Grayscale, 7,390,000 shares between them. Real money, and I'm not going to shrink it. It is also 16,900 times JPMorgan. Same asset, same deadline, same country, 2 banks whose front doors are a short walk apart. If one phrase can cover both of those numbers, the phrase is doing no work at all. And look at what Goldman actually bought, because it is printed right there in the fund names, not XRP. 5 funds that hold XRP on its behalf. Every institution on this list owns fund shares, and that distinction is going to matter more than any dollar figure I've read to you, because the number the whole timeline ran in the last day came out of a bank whose XRP position is smaller than a used car. Bank of America, 18,318 lines on that table, and exactly one of them says XRP. Overnight, that one line became Wall Street quietly stacking XRP. $76,000, a deposit on a 2-bedroom flat, and the whole of it on a federal record. So watch the cusp sitting on that row, because it is the only thing that says what was actually bought. And I went to read what the fund is. This is the fund's own website. The ticker is XRPI, listed on the NASDAQ. In the fund's own words, the fund does not directly invest in XRP. It holds futures contracts instead. So the position the whole internet called Wall Street stacking XRP is a bank holding 13,200 shares of a fund that owns no XRP at all. Its net assets are $82 million. Share price, $5.51. Over 14 million shares outstanding. And that page is stamped August 13th. Bank of America's line was 13,000. of those shares at the end of June. Round it however you like, it is about a tenth of 1% of the fund, and it is why the 1,000 story was never possible. $76,000 divided by 13,000 shares is about $5.74, and a share of that thing costs about $5.50. I want to hear in the comments if anybody sent you that sentence, because nobody sent it to me. Now, some of those 166 do hold XRP directly, and I would not flatten them, but the biggest names on the list are not holding for the reason that you think. Jane Street, 13 XRP lines, $33 million, more than 4 times what Goldman put into Grayscale, and nobody has ever written a headline about Jane Street believing in anything. Read those 2 lines together. Canary XRP ETF, a call option on 732,500 shares. Canary XRP ETF, a put option of over 732,000 shares. A call is a bet that the price goes up. A put is a bet that the price goes down. Same fund, same filing, 200 shares a par. That is not a view about XRP. It is a market maker holding both sides so it can sell you either one on demand. It is doing exactly the job it exists to do. Citadel's 12 lines have the same shape. Puts and calls on the same funds, including the 2x leverage ones, which means the famous half of this list gets quiet the moment you strip the market makers out. A firm position like this is positioned for traffic, never for price. So look at what the price actually did in the same week all of this was being filed. XRP printed its weakest close since November 2024, and inside the same 24 hours, the biggest wallets added 72 million XRP. XRP itself sits flat at $1 in a 24-hour band between 98 cents and $1.01, and I check the direction live every single time I record. So the tape was at its ugliest the exact week the paperwork was at its best. Whales bought that. A market that is pricing a story does not look at this. A market that has never opened the filings does. And I told you this ends when I change one day. Same search, same form, the same 6 weeks of calendar. 12 months earlier, 6 institutions in the entire United States put XRP on one of these forms in that window last year, and the whole list fits on one screen. Read who they are: Jane Street, Flow Traders, Tower Research. Half of it lists the market makers. The same firms I just showed you, they did not arrive this year. They were already here, and they are the only part of this that has not changed. What arrived is the other 160 of the 69 advisory firms, 18 banks, Japanese retailer, 3 Canadian banks, an Italian one, 6 of 166 in 12 months, and almost none of it is conviction. It is 166 compliance departments that each had to classify XRP, price it, get a custodian to hold it, and then sign a federal form underneath it. That is the slow, expensive, boring part. Vet runs a validator on the XRP ledger. His machine is one of the ones that closes this book every few seconds, and he posted that into the weakest close since November 2024. He did not have a number I just gave you. He was right anyway, and here is what he was right about, because it is printed in one of the pages I opened tonight. 166 is not 166 buyers. It is 166 sets of paper that did not exist 12 months ago, and paperwork is the thing that has to finish before Monday can set up. Next up, I'm on the room Ripple walks into next week with the heads of both agencies sitting in, because the people in that room decide how wide this door opens from here. JPMorgan's $5,000 was never the story. The 165 names underneath it are. Like, comment, subscribe, stack facts, not fear, and I'll see you in the next one.